Hey guys, welcome to Market Wizard. My name is Manas Madhavan. Let me quickly show you the trades which I have took today. So I have almost made 3,365 rupees profit. So I was carrying this trade from yesterday, right? So today, right, the options will expire. Today is Thursday. Today is the expiry day, right? Let me show you from the chart what was my levels and what was on my mind when carrying this trade, right? So without any further dues, let's jump into the Banknifty chart. So let me open the chart here. So I have took this trade yesterday, which is on Wednesday. If you see around this time, okay, around this time is what I am taking the trade. Okay, so on the upper side I have sold 43,400 call option, and on the downside I have sold 42,500 put option. So this was my trade, and I also brought the hedges because I am an option seller. Obviously I will hedge the positions, right? So this was my initial trade. But what happens, if you see here, the market has almost made the closed the high of the day. Okay, you see here the market has almost touched the level of 43,300, right? That is where the market is opened here, if you see. So this is a bullish sign, right? So if you see this pattern also, right, it's a bullish sign. So what I was thought at that time is there is a chance that market can open gap up tomorrow. Okay, and my strike was here, right? So you see my strike was here, 43,400, and that is what exactly happened today. You see the market has opened on the level of 43,500, right? And my strike was at 43,400. So what happens, the market opens at 43,500, my strike, which is 43,400, will become in the money. So what happens, the option becomes in the money, the premium will increase, right? So premium will increase. Not only premium will increase, it will just move very faster when it becomes in the money, right? So I have almost sold this option around 35 rupees. But when the market opens, let me show you the price of this particular strike, right? So this was the strike which I was talking about, 43,400 call option. Okay, let me open the chart of this. Okay, so you see here I have almost sold this option around somewhere here, 35 somewhere here, and yesterday it made a high of 60 rupees, right? So I almost closed this position from here. I just booked a loss of 680 rupees. Okay, I have booked a loss of 680 rupees, and I have exited from the trade. And you see where market opened next day, right? So which is today. So if you see, the market opened around 43,500, which made this option become in the money. And you see the price, it almost touched 150 or 155 rupees, right? So what if I stay in the trade? I have sold this option around 35 rupees, right? And it made a high of 155. Let's say 155 and 35 rupees, right? So around 120 point, guys. And I have, what is my quantity which I'm selling? 50. So if I stay in the trade, okay, so the amount which you are showing here, the 6,000 rupees, right, this was my loss if I stay in the trade. When you are not sure, when the trade is not working out, right? So if you are sure that there is a chance that market can gap up or gap down tomorrow, and there are some events. Yesterday there are some events as well. There is some US events, and India's GDP growth, quarterly GDP growth was announcing yesterday, right? Even though it was happened in the market hours, but still there is a chance that it can rally market, or it can crash the market, right? So that's why I have been carried the this particular strike yesterday. Okay, so if you see here, yesterday I have almost booked 680 rupees, right, for this particular strike. So what if I stay in the trade? So instead of 680 rupees, it will be 6,000 rupees loss. Okay, so that's what you want to understand, guys. So whenever the trade is not working out, book a small loss. There is no problem with the small loss. Okay, the biggest enemy of the trader is a big loss. Okay, so if you make a big loss, it is hard for you to recover from that loss, right? So never do that, guys. Okay, so let's go back to the trades. Okay, if you see, um, so these are hedges which you are seeing losses here, right? These are hedge for positions which I brought. And so you can see here I have almost made 1477 rupees profit for the strike 42,500 PE. So this position I was carrying, so I was in a safer range yesterday, right? So that's why I carried this particular strike. But call option, it's I am really I was not really safe, that's why I have exited from that position, right? And also here if you see I have almost made 2455 rupees. So this particular strike, this was actually not an option selling trade, so I brought this option. So I usually never buy options, I am an option seller. So but what happens, I only buy options when I have double triple confirmations, right? So let me show you what was my intent when taking this option buying trade, right? Let me go to the chart and show you. Okay, you see here the market was trading within a range. Okay, you see this narrow range, right? You see this is the range which market was trading. From what time it was trading, you see the time which the market which was trading in a range is from 10 o'clock to around 1 o'clock. Okay, so it's a long duration, right? And it is a very narrow range. If you see here, it's around 50 points, right? 43,350 to 43,400. It's a 50-point range. For Banknifty, 50-point range is like a joke, right? So that's why, so I was waiting for a breakout here. Okay, so then exactly at 1 o'clock, if you see this particular candle, it's a very bearish candle, right? So you see all other candles, if you see all other candles here, these are small candles, right? So this particular candle is a clear confirmation for me. So what I did was I brought this particular strike, this 43,200 put option I have brought. So around 35 rupees I have brought it, and I have exited around 75 or 78 rupees. Okay, so it almost made me the profit of 2,400. Okay, but the interesting thing here is okay, let me show you the chart of 43,200 PE. Okay, so you can see here I have almost made an entry around here at this level, and it almost touched 140, right? It almost touched 140, but I haven't stayed the trade very long time because it is an option buying trade. Okay, and it's an expiry day. Anytime there is a chance, if market rallied from there is a chance that this particular option will become zero, right? So that's what actually happened here. If you see, that's what actually happened here. From 140 it drastically changed to it becomes zero, right? Why it becomes zero? Because market rallied from there again, right? So that's why it become zero. So I have no regrets because I my entry was perfect. I could not say my exit was perfect because I have exited around somewhere around here. Okay, but still I have how much points? Around 70 points, right? So instead of 2,000 I would be getting around 6,000 or so profit. So whenever you're buying options, the time is your enemy, right? So time is against you. So especially in the expiry day, so you don't have any time left. So what happens if the market, the strike doesn't touch that particular level, the options will become zero, right? So that's what exactly happened here. Okay, so I just quickly ended the trade and I quickly exited. I have almost made the profit of 2,400 here, right? So guys, this is what today's learning. So whenever Banknifty spot is near to your option strike, when you are an option seller, for example, the Banknifty, you have sold an option of 43,400 call option. If for example this was your strike, and if the Banknifty spot is reached around 43,300, right? So here there is only a gap of 100 rupees. Okay, so for Banknifty 100 point is very small range, right? So Banknifty can easily gap up or gap down around 200, 150, 300 point easily. Okay, 100 point gap is a very small gap. Okay, whenever you are taking trades, okay, whenever you are carrying trades overnights, you should be in a safer range. So what I mean by safer range, in the current market scenario for Bank Nifty, the safer range will be around 300 to 400. Okay, so that's the safer range for Bank Nifty. For what I mean by safer range is nothing but, for example, Bank Nifty is trading around, let me take a round number for ease of understanding. Bank Nifty is trading around 43,000 and it was supposed to close here. So then you are carrying a trade of 43,300 on the upside, and on the downside you are carrying 42,700. Okay, this is PE here and this is call option, right? CE. So this is a safer range, but I am talking safer range in the current market scenario. So what is the current market scenario? The current market scenario is there is no much tensions in the market, there is no much panic in the market. Okay, so how can we identify there is less fear in the market? So by seeing the India VIX index. Okay, this is India VIX index. You see it is trading around 13.36, right? When India VIX is going higher side, so it will indicate that there is a chance that the volatile moves will happen in the indexes. Okay, so that's what India VIX indicates. So if around 1 or 2 months back, India VIX is trading around 17 or 18 rupees, right? So and it even went higher than 20 rupees as well. So around that time, the range which I told earlier is not applicable. So that time the range, the safer range would be around 700 to 800 points. Okay, not 300 or 400. So you should be in a safer range. Okay, if Bank Nifty is getting near to your strike around 100 or 200, so it's better to exit from the trade. Do not carry the trade, right? That's what, guys, I want to convey today. So thanks for watching the video. Do not forget to subscribe the channel. Thanks everyone. Bye. Good night.